Well, this market has been one big mosh pit the last several weeks. The S&P, as we know, has been in this mild downtrend, and it's posted 6 distribution days in the last 20 days, and it's below the 50-day. It's struggling to regain that moving average, but it's doing so in a fairly feeble manner. We also know that many of the other major indices are also under their 50 days, except for the NASDAQ and the NASDAQ 100. The CME FedWatch reported that the odds of the next rate hike from the Fed will likely be in September, when the probability is over 50%. I think it's about 66%. And that's due to the cooler than expected economic data that's coming through. Although today's jobless claims is reported to be at an 17-year low. The Fed, as we know, has indicated they'd like to hike 2 more times this year, but if the economic data start to show signs of real slowing, they wouldn't have room to hike twice. In fact, they might have to even stand pat or, God forbid, lower rates. They really don't have much room, as we know, to reduce rates. Their mandate has been to hike rates, so that in effect puts more gas in the gas tank, so that when the economy really does take a tumble, they'll have room to reduce rates to spur growth. But as we've written a number of times, first of all, the world has never been mired in so much debt, well, it has in the past, if you go back, look back the last couple thousand years. And when these sorts of extremes happen, where interest rates are at all-time lows, you have a bad situation ahead. There is no record of a soft landing. So if the economy doesn't pick up or continue to pick up, allowing the Fed to raise rates, then we could have a nasty situation on our hands, because the Fed has painted itself into a corner, in a sense that they don't have any real room to reduce rates. I mean, the option is to go negative, but I think that experiment has shown that type of strategy to be a failed strategy, because we saw what happened in Japan, Germany as well. It effectively corrupts the financial structures by going negative, going into a negative interest rate environment. And I don't think that the Federal Reserve Chair Yellen really understands that, because she's gone on record twice for saying she would be open to the possibility of going negative. She hasn't said that recently, but she did say that in 2010, and I think again a few years later. And I don't think she still holds that position, just because of what we've been witness to when a country does go negative. And to underscore what's going on in terms of potential downside to the market, we have this growing uncertainty of whether Trump can get his tax reform passed. Part of the post-election rally has been due to the expectations that he would get some tax reform passed in the way of lower taxes. So the market's it started rallying right after the elections on November 7th, went into an uptrend, but over the last several weeks it stalled out. And interestingly, interest rates have been rising once again. The benchmark 30-year mortgage rate fell below the it fell below, let me see, let me look at this. TLT, yeah, that has been heading higher in price. Thus, interest rates for the ETF, which tracks the 20-plus year U.S. Treasuries, has been falling. And therefore, the idea here is that there might be an indication that the number of anticipated rate hikes are less likely. Because as we know, TLT, the price of that dropped sharply after the elections for several weeks, and since then the price has started to meander higher, especially as of mid-March. It's gone up in an uptrending fashion, so that's indicative of lower rates, or a market at least anticipating maybe the Fed may not have room to hike as aggressively as it had planned this year. And we also have a number of stocks which continue to languish. They make short, sharp gains, and then these gains are often reversed. The breakouts, of course, have not been working for many years, but now even the gains lasting a few days are often reversed, as we saw with recently with BZUN. That's Baozun. You know, that had a nice double-digit gain in 3 days, I think 17%. So, you know, you want to take at least partial profits in that situation, and then it just goes right back into its base. The FANG stocks are not faring a whole lot better. They're having a tough time making any meaningful progress. Netflix had disappointing earnings, so that's dropped below its 50-day for the first time in several months. Google seems to be treading water. It certainly isn't establishing any meaningful uptrend. Amazon and Facebook, on the other hand, they're very proactive companies in terms of positioning themselves. So they've been managing better than the other FANG stocks. So anyway, Gil, what's your view on this market so far?
Well, it's a pretty choppy environment. You can see that, like, basically what's leading the market right now are these big stock NASDAQ names, because you got the NDX is actually pushing for an all-time closing high right now, so that's what's really got this market moving to the upside. The NASDAQ is still just below its closing highs. Maybe it'll push higher. I don't know. But I think overall this is just a very volatile, crazy environment, and it depends what stock, well, your success depends on what stock you're in and at what time. You know, if you're short something at the right time, like Netflix the other day after earnings, you notice it hovered. I actually shorted this in pre-open. It was trading around 149, 148, and got that off, and the thing broke hard. And I don't know if this is, I never saw it trading down near 140. I'm not sure if it's some sort of a weird blip. But in any case, you can see it undercut the lows of this here. So, you know, that sets up, if I'm shorted, I'm covering here and letting it rally. And now you're getting a rally back towards the 50-day line. I would watch to see how this plays out, because it could turn out to be shortable. So, and my approach to this market is basically bifurcated. I can be long something or short it, or short something I was just long, and vice versa. So in this case, if you wanted to get real tricky, once you get back above this low, you could go long Netflix for a trade and see if you can get it up to the 50-day moving average. But you know, you watch and see how the 620 chart plays out here. But it seems like this is mostly what this market is giving you, is these sort of blip type trades. You know, we saw the Baozun, watching the Dow up 162. I mean, after yesterday's action, you would have expected everything to be gapping down this morning, because it looked pretty ugly. You had a big stall out day on the NASDAQ yesterday. So you see this right here, where you opened up, you rallied up, and then you rolled back to close down. The volume was heavier, so that looks like churning and distribution. And then today it turns right around and heads back up. What's our volume rate on the NASDAQ right now, Dr. K?
Now let me check real fast.
It's slightly up. I'm just amazed watching this market now. It's just like jamming to the upside.
Yeah, well, the NASDAQ volume is -4%, but the New York volume is 10%, plus 10%.
Okay. Well, we'll see what happens. You know, if you look at this in the macro sense, I think it's still a matter of watching what individual stocks do, because the indexes will drive you batty. And you can see all that's happening here. You got the S&P pushing up to the 50-day moving average. The Dow is still well below its 50-day moving average. And let's see, what about the NYA, the New York Composite? Still well below its 50-day moving average. The only question here is whether, let's go back to S&P, if the NASDAQ's able to hold up, let's say, okay, does this, do we get some sort of a breakout through the 50-day and this declining trend line here, which might set us back up on a rally? I don't know. It's really tough to figure out, and it's even tougher to figure out in terms of what you would be long in order to ride such a move, especially with earnings season. You know, we're right smack in the middle of earnings season. You've got names like Netflix get tagged on earnings. You've got today, I think the Dow is being driven a lot by American Express, and look at that. That's pretty. Let's see. What about the NYA? The New York Composite? Still well below its 50-day moving average. The only question here is whether, let's go back to S&P, if the NASDAQ's able to hold up, let's say, okay, does this, do we get some sort of a breakout through the 50-day and this declining trend line here, which might set us back up on a rally? I don't know. It's really tough to figure out, and it's even tougher to figure out in terms of what you would be long in order to ride such a move, especially with earnings season. You know, we're right smack in the middle of earnings season. You've got today, I think the Dow is being driven a lot by American Express, and ugly pattern just coming up off the lows on earnings. And then you have, I think the other one is CSX. So this is why you don't want to be short something. If you were shorting this along here in the 20-day earlier, you made some money, but then notice how it undercuts all these lows, and now we turn back to the upside. So that was up 160, just about 165. There we go. It's going to be interesting to see if this holds up, but it just seems so bizarre, you know. Things just flying back and forth, although we do have some names on the list that are continue to just trend higher. For example, look at JD, continues to go higher, and that was looking a little grim back in mid-March when it got whacked with some volume here. I think Baba is hanging in there, continuing to move higher. Momo also. So these three Chinese names that we've had on the focus list are acting okay. But you want to, watch these. I would use the 20-day moving average on all the three of these as my maximum selling guide. So I think if you're long stocks that you're not getting stopped out of, so for example, if you're not getting whacked on a Bausen, if you sit on it too long, you don't take the gain, and you're long something like the Momo or the JD or the Baba, then all you want to do is just use your trailing stop. And that's the only thing you can do, because I think the market is so random and bizarre that focusing on just what the stocks are doing is going to help you a lot more than trying to get wrapped up in what the indexes are doing. And you'll find opportunities on both sides, like Netflix short the other day. Another one that was actually pretty good that I played was United Airlines. And you can see here, this thing opened up on earnings and then rolled over, and it undercuts this low here and then turns back to the upside. Now it's at the 20-day line, so actually we'll put the short out again here. And I'm not really paying attention too much to the rally or whatever I see the index is doing. I'm just going on the basis of what I'm seeing in this stock, and the airlines have been pretty weak as of late, and UAL especially for that infamous video. A quick question. Somebody's asking about shorted NVIDIA on Tuesday at 98.66. Well, I mean, where are you shorting? I guess, are you shorting at the 10-day? I think it's shortable at the 20-day, and if you're stopped out at the 10-day, then fine. The next place you come after it is at the 20-day, and it may keep going, and it'll eventually get to the 50-day. I think earnings come out, when, in early May. Dr. K, when is this due for earnings?
Let me get my app up. But yeah, I think that sounds about right. Yeah,
so stupid or reasonable moves. I don't know. If you're shorting at the 10-day and you're using that as your stop, then you're stopped out. I guess if you're stopped out, then it was stupid. But a trade is a trade, I can't really evaluate somebody's trades and say they're smart or stupid unless they're being done totally randomly. But if you're shorting this at the 10-day line and using that as a really tight stop, you might consider a couple of things. First of all, you're kind of late and you're trying to catch the first bounce, and a lot of times in this market you'll get more than just a one-day bounce. You'll get 2 or 3 or 4 days, and so you'd rather be laying back and waiting for it. In other words, you got to be patient on the short side. Just jumping in on stocks, you see them break down and now you just got to get in on the first up day. I think you're a little premature. So, lay back and just let them do their thing. The other one he's talking about here is Weibo. Whoops, let's see if I can get this right. If you shorted it at 50.50, BS, is that bought the short back 52.52? When? Today? I don't really understand. You would use the 50-day line as your stop. So, I think any of those are reasonable trades, but you can get stopped out, and if you get stopped out, you get stopped out. End of story. So nothing really to consider there. You see a trade, you take the setup. If you're stopped out, you're stopped out. So it's that simple, really. Let's keep going here. I want to look at some of the other names. So you got a big Dow rally today, driven by American Express and CSX, which came out with strong earnings. And let's see. I want to look at the rest of the focus list here. So Amazon holding tight along the 10-day line. So earnings come out next week, though. So what are you going to do? You're going to buy it here. If you own it lower, I guess you can hang with it because you should have some cushion. But other than that, I don't really see any reason to be sticking your neck out here ahead of earnings, unless you think you're you're going to get a big move. Somebody wants you to discuss the VVM today. I don't know what there is to discuss, but do you want to discuss it, Dr. K?
Well, there's not a whole lot to say. It just does its thing. The market's being pretty schizophrenic here. Obviously, is not helping in terms of these timing models. Because there's one style of market, for instance, 2015, where the markets were sideways for several months, and the VVM did exceptionally well because it's really good at doing shorter-term trades. Also, you'll notice that even though the market went sideways, XIV was going higher. So those situations can happen. Obviously, that could happen again, which is fine for the VVM because, as I said, 2015 was exceptionally strong in terms of it being able to profit during a sideways trend or shall we say, non-trending market. Right now, we have a lot of indications that that volatility would be rising, so the model went to a buy signal on buying volatility. But lo and behold, when everything's pointing to lower markets for so many reasons, you've got the Nasdaq leading the way, even though many of the other averages are still under their 50 days. So I've been tweaking with the model a bit to actually reduce its number of whipsawed signals because it's got quite a few. And that means to hold on to positions a little bit longer than normal. So, obviously, this new adjustment bodes well in terms of the entire timeline of back tests. Essentially, the models just will more sit and wait more for longer periods than prior because sometimes the model will just get whipped all over the place. And this is my attempt to reduce that kind of activity. In addition, sometimes you get these, especially with UVXY, if you're playing that instrument, obviously you should keep your position size smaller if you're playing that one, or use VXX, which is half the volatility of UVXY. As we always indicate, know your risk tolerance levels before investing in any instrument, stocks or ETFs or otherwise. So at this point, the model obviously is detecting that the markets are still prone to more volatility, but that could change. It could change later today. It could change by tomorrow. We'll have to wait and see.
Yeah, I mean, to me, it looks like it's just hanging out along the 50-day line, the UVXY, for example, and there's really nothing. The movement today is well within the recent price range. I don't really see this as being, doing anything really, despite the market being up 155 points on the Dow. The Nasdaq's up more than that, up 50, up 0.87%. So I find it all sort of amusing in just how frantic the market suddenly starts moving to the upside after looking pretty weak yesterday. In any case, let's see what else we got.
Oh yeah, and what else is interesting is that these instruments, something like UVXY should be down a lot more right now, given how much the markets have rallied today. That's an indication. Again, the model is sensitive to that, so it's anticipating rising volatility. Therefore, you could interpret it as the UVXY is reluctant to drop, even in the face of a rising market. And we saw a bunch of that activity in 2015. That's why, but it was in reverse. In 2015, you had the XIV moving higher despite a market that was trading sideways. So in that case, the model anticipated lowered volatility over the range of weeks it was on its sell signal.
You can see that Coherent actually had a pocket pivot yesterday off of coming up through the 10-day line. If you guys see that, that looks decent. The stock actually is going higher today, so it's heading back up towards the highs. Notice how you had a breakout and then you failed, but you found support at the 50-day line. This is almost too typical for this market. This is what you would call an ugly duckling type of setup. The stock essentially fails on a breakout, so it's kind of a late stage breakout. So let's look at the weekly chart here. So here's, it's been on a long run, so you had a breakout here and you failed, and now you just bounce off the 50-day line. So rather than chasing the breakout, what you would be doing here is waiting for it to pull into the 50-day line, I suppose, and that would be the one way to buy the stock, a lower risk way rather than chasing the breakout, because no doubt you probably would have been pushed out. But I think this is just typical of this market, and it's what makes it so difficult right now. So I find most things are very choppy, and most trades, if they work, are just scalps, even the shorts. So, but some of them can work out pretty well either way. For the most part, I don't see a lot of huge moves on the upside, other than stocks just chopping around within their patterns. Because even something like a Shimor or Chem Hours, I don't know how do you pronounce this thing. You know, it's just moving around in another range on top of this range here. So nothing really, you know, a little this, a little that, but it's not really making any huge progress. On the other hand, if you're looking to buy it, I guess you would buy it as it dips back into the base, and you just buy it on weakness, and that seems to be the best way to go in this market. Do you still offer asset management guided by MDM ETF strategy? No. Why do I want to manage other people's money? Let's see. Facebook is pushing the new highs, so that's helping the market push higher as well. Snap is interesting because you actually had, and we talked about this over the weekend, you could get a undercut and rally move. It undercut this low, and I talked about this last week. So it actually took one try, two tries before it actually worked. So on the third attempt, it comes up above 20.03. You can buy it there, and then trade it up. You know, I guess it's right at the 20-day exponential moving average. My inclination here is to short the thing right at the 20-day line. So if I'm playing this on the long side, I actually would sell into the movement into the 20-day exponential moving average, and then might even look at shorting it here. So that looks like a possibility. I think they got it moving the other day on some rumors that Disney might buy them. I'm not sure why Disney would buy them, but you know, if somebody wants to start a rumor like that, I guess it works. It helps out all the people who are still long the stock from up here. Anyways, let's see. Square comes out with earnings on May 3rd. They're just hanging out in a base, so there's really nothing to do here ahead of earnings. The trade desk, I think, is done. Although it's, you know, now it's below its 50-day moving average, but you'll notice that it actually is holding along these lows here. So I don't know if it sets up some kind of undercut and rally move from here, but I guess that's a possibility. And the one way to test that, anytime you see a stock undercut a prior low, and again, you know, some people want to start over applying it. Anytime something falls below some low somewhere, they want to start getting long the stock. But if you theorize about this and you employ a little bit of thought, you know, this stock came out of a base here, so you had a breakout and a run up. So you get the first pullback to the 50-day line. Now it could be rounding out the lows of a new base. That's a possibility. So if it is, then you could pick this low here, or you could pick this low here as undercut and rally lows. So the first low it undercuts, and that triggers a rally. So once it comes back above that low, you could buy the stock, and you could use that as your stop. That's the same way you would be working something in Snap, for example, and you would be up a buck right now on that. So on Snap, whether it keeps going, I don't know. We'll see. So, you know, that's how you would play it, and it could be an undercut and rally, because this could be the lows of a new base. You don't know that. So, but it looks logical. So, you know, when I know yesterday somebody was tweeting me about, not NVIDIA, but Netflix. Is that Netflix an undercut and rally candidate? You know, I'm not sure what that means. Does that mean it's an automatic buy on the undercut? What it means is if I'm short it, I'm definitely covering on the undercut of this low. And then it turns and rallies. Now, does that mean you're going to buy it and it's going to take off and gloriously move to all-time new highs? I don't think so. But what it tells me from the short side is I'm covering and looking for a rally back to the 50-day line up here to get short again if I want to. And also, like I said earlier, if you see one of these, you're short it, you could actually flip to the long side and play it as a long trade. That's one way to deal with it. But an undercut and rally isn't something that you have to determine beforehand, because the stock was trading at 139. It hadn't rallied above any prior low just yet at that point. So, it's not a candidate. It's just a trade that is very concrete. If you have a prior low, you rally up above that prior low in the pattern. So this is the low here. You rally, you undercut that low, and then as soon as you turn back above that low, you get long right at that point, and you use that as your stop, maybe add 1% just for good measure. And you trade it, and that's it. You don't have to theorize about whether it's an undercut and rally candidate. Either it is an undercut and rally or it isn't, based on what it's doing in real time. So finally, Viva has been acting pretty well. It's just basing. When did they come out with earnings? Isn't it May?
Let's see here.
Yeah, I think it's May. No, where we go?
Well, it's exactly May 25th, late May.
Yeah, so it's late May, so that's not even really a factor. I'm amazed at this. I'm just watching this UVXY trade, or the way it's trading. I bought some yesterday when it was down like around 1824, something like that. And I'm still long it and just kind of hanging on to get a feel for this thing. But it's interesting how it is holding in pretty well. I was thinking this thing would get clobbered, and this morning it was actually, the Dow futures were up like 30 or 40, and it was trading at 1910. I think is what I remember, and it's actually still above that, even though the Dow's up 160 points. This VVM buy signal on the VIX could still work out pretty well. I don't really see anything that's negating it. What's that?
That's why it's still on its buy signal, because it's still anticipating a rise in volatility.
Yeah, but I'll tell you, it's one
very
crazy
sensitive model.
thing.
It could switch out of it could go back to cash quite quickly as well, depending on how the markets roll.
Okay. I don't know. It looks okay. I wouldn't be surprised maybe if we saw the market come in a little bit. Let's see, some more stock. You know what I'm blown away by is the strength in the gaming stocks. They're all breaking out, the video gamers. And these actually look weak, and I thought they might be shorts if they busted the 20-day moving average, but instead they're all trucking higher. ATVI, Activision Blizzard is a little less robust, but it's actually been moving higher for a while longer, whereas Electronic Arts and Take-Two are coming out of bases. So, but there's no heavy volume yesterday. What you had yesterday was a pocket pivot breakout. So it clears the top of this base on a pocket pivot. So we'll see if this fails, but I would watch this. If it does fail, it's possible that you'll see, let's go EA, that these could fail as well. But right now that's not really clear. But it is something I'm just watching as a potential group sort of move. So, but I would say right now that sort of thing is highly theoretical. Somebody's asking thoughts on SQ, SNPS. What thoughts do you really need? Stocks in a base. Do you see a pocket pivot or any sort of buy signal here? I have no other thoughts. I think IBD talked about this one as being involved in the Internet of Things or something like that. But you've got a company that's growing earnings at 38% this last quarter, up from 15% the prior quarter. But next year and the year after, they're going to grow earnings at 8 and 9%. Doesn't strike me as huge, robust growth. So but just look at the technical action. What is it doing? It's basically in a base. Alarm. I don't know what I'm supposed to tell you on this either. So it's sort of up. It had a big move. It's pretty volatile. You get a lot of gaps down, and it's turning back to the upside. So do you have any thoughts to offer here, Dr. K?
Well, on that S&PS, also when you look at a stock, just don't get seduced by the basing pattern. until you look at the overall chart. And you look at the overall chart on S&PS, it does this a lot. It'll have these tight little bases, but it doesn't really go anywhere. You know, look at the last few years of price action. It's a very slow, you know, it can be a pretty slow mover. Granted, the last upcycle, well, was from 60 to 70. Again, that's not that big a move, but in that amount of time. But you know, that's a little faster than the stock has moved over the last few years, several years, I'd say, since September, you know, 2010. So you know, because the future earnings are not, nothing's looking all that great about this company in terms of accelerating its price performance. So you know, it might just continue this kind of slow uptrend that it's known to do for the last several years.
IPGP, it's another stock in a base. So I don't really understand what you're asking us. You know, there's nothing really going on here. They're just tracking sideways. So you want our opinion? Our opinion doesn't really matter. What you do is you watch the price volume action and determine an entry point if you like the stock. But I don't really see why you need somebody's thoughts on these, aside from the fact that of the obvious, you know, that they're in bases. You know, we don't have any magic crystal balls here where we could tell you, yes, you want to load into this one and it's going to the moon. I don't know. It's IPGP has had its moments over the past, and you know, it's just basing now. But you got earnings coming up with a lot of these. On these three stocks, you got, I guess, IPGP going to announce earnings at the beginning of May on the 2nd. What's the other one? Synopsys is going to be announcing earnings in the middle of May. So they, you know, they may not even go anywhere. But I think you just watch the technical action. Don't get hung up on somebody's opinion or some idea that we have some special knowledge of you know, the future for these stocks, or that they're amazing stocks I want to own. So keep an eye on Zillow, Voodoo. I don't really understand what you're talking about. As a short? Is that what you mean? It probably is a short. So it's running out of gas up here along these highs. I'm assuming that's what you mean, because it's Voodoo. I guess this is really low volume. What is the volume level on this thing today?
Well, it's minus 62%, but Voodoo applies to a stock that's getting real quiet.
Well, actually, Dr. K, the Voodoo thing, the whole Voodoo thing started with the short side. And basically, Voodoo was you get a Voodoo rally. So in other words, you have a rally up into resistance. In this case, would be the prior highs, because it's past the 200-day line, it's past the 50-day line, and it's past the 20 and 10-day lines here. So that does apply in this case when you're thinking about a rally that's running out of gas. But you know, you could have thought that back here along all the moving averages if you look at it. So I'm not really sure if this is one that I necessarily want to be shorting just yet. I think what you do, if you really think it's running out of gas, what you do is you watch the 620 chart, which I know it's hiding in here somewhere, and wait to short it on a sell signal. You know, it looks like you got one earlier, but it didn't hold. You know, one of the things to watch for when you're using this chart, and I know some people want to try and use this as some sort of a trading system. It's really just a guide. Go ahead.
Go on. I just want to make, just so no one's confused, Voodoo applies to both stocks that are dropping on lower volume or rising in a period of resistance on lower volume. So it depends on where you're long or short, just so that everyone's very clear on that concept and not taking it only one way or another.
So yeah, I mean, you'd watch the 620. One thing I notice here, and this is a good point to make actually, is that when you get the cross here, but notice that when that occurs down here, the MACD is already in a sort of a MACD stretch and cross sort of thing. The MACD histogram is kind of stretched relative to everything else here on the downside. And so a lot of times if you get a signal like that, when the MACD is already stretched and is trying to turn back, it may not work out so well. So I usually won't use that as a signal. So I think in this case, if you were really hot to short this one and you're trying to hit it on the way up, then you got the MACD stretch and cross. Whoops. Come here. you got the MACD stretching across here, and that occurs up near the highs. So you could have hit it closer up here. You would be slightly up on it, not by much, but still you'd be in a better position to be shorted. So that's another way to use a 620 chart. So and also you know a couple of things. When you see this MACD stretching cross on the upside and you get short on the cross, okay, the other thing that you'll notice is that at the same time on the daily chart, it's actually coming up towards this resistance. So, you could be hitting it on any day here, and it could end up working on any of these days depending on what the market does. Now, think about one thing, though. Yesterday, the market rolled in pretty good, and Zillow was up. So, I don't know if it's ready to give it up, but it's something to keep an eye on. I think, though, aren't they coming out with earnings pretty soon? 5/1 on May 1st. So, I don't know. I don't really, if you think it's going to break down before earnings, then you could try and come after it. But, the 620 chart, and we get a lot of questions about it, and people seem to try to treat it as some sort of generic trading system where you get the cross on the MACD and the moving average, and that's where you hit something. But it's more of a tool that I use, and I use a lot of different ways of looking at this in terms of the where the MACD lines are, where the moving averages are, whether you're setting up undercutting and rallying off of intraday lows and so whatnot. So it's mostly a tool, but it's not really a trading system, although I know some people want to try and treat it like a trading system because then they don't really have to think. And the reality is that most people are lazy and don't want to think, but you can't use it that way, and I don't use it that way. So for anybody who's listening who's been asking questions about that, take note, please. ELF is 5-day pocket pivot on ELF yesterday. Yeah, but that's only one, so you'd be looking for at least a cluster of them. We don't just buy 5-day pocket pivots in and of themselves. I mean, you could see here you had a pocket pivot here on this day, and the stock went up one more day and then just came back in. So I wouldn't get all excited. I don't really understand the attraction to ELF. It seems kind of doggy to me. This is the weekly chart. It's just an IPO that chops around, so I don't really see anything there that looks attractive on a longer term basis, like this thing's going to trend out of here and just take off. I don't see it. And you got earnings due next week, so I think I'd just chill on this one. And remember, when you're looking for 5-day pocket pivots, you're looking at 5-day pocket pivots. One alone is not enough. You want to see a cluster of them. So that's one of the reasons I like my special chart view, because I can look at, let's look at Zillow, for example. Whoops. Not picking up any pocket pivots in the pattern here. Is that the one? No, I'm sorry. ELF. Getting my stocks crossed up here. Come on now. Here we go. You can see 1, 2, there's a 5-day pocket pivot here 5 days ago, but that doesn't really go anywhere. So, I don't know. This stock to me just looks like it's in a base. They're going to need something big in the way of earnings to generate some sort of upside momentum, it looks like to me. So, and earnings growth is what, 19 versus 15 cents in the last quarter, up 27%, which is pretty meager. I don't know. I guess it's sort of a cousin to Ulta, is that right?
Yeah,
Starting
that's
to
right.
break down. So Ulta's looking to me like it might be turning into a short. It's had a huge move. So in terms of group action, I don't know. Dow's up 174. This is almost comical. It's just manic. It's like it's algo driven, and the algos are just in there buying everything in sight and just jacking everything. So Zyop, 2 huge pocket pivots over the past 2 weeks. I don't know. I think you're still playing in garbage land here.
Yeah, there's a lot of risk in these kinds of names. It's a very small cap biotech that trades single digits. So you're
Yeah.
a lot of risk you're taking on when you're playing in this kind of small pool.
Just junky biotechs. And even, you got to watch out because even the good biotechs are subject to like inside, here's one that's been doing, it was doing really well, and I think at some point it gets a little climactic. So if you're long this thing and you're looking at this, you had news of a possible buyout by Gilead, and also it was being added to the S&P 500. And to me, I think once you get that sort of momentum, you're using at least a 20-day moving average as your stop, but just selling into that seems to make sense given the huge upside movement. So the biotechs aren't really doing anything. Here's another one that had a really great move earlier. Now it's this has been moving since January, and you got a little hot and heavy in here. You broke out and you failed. So here's another failed breakout, which is almost standard issue for this market. And now this thing is undercutting the lows of this base. So I don't know, maybe it's setting up again, but that sort of fell by the wayside. Glaukos even, that was on the focus list for a while, and that came apart the other day. But again, you're making some nice gains because we put this one on way down here, if I recall correctly, in early January, right around 36. And it had a huge move, and at some point you just take your profits and get out of the way. We're up 178 now. Look at this thing. What's driving it? Anybody know? Did Trump pass his tax cut legislation? The interesting thing here is you got the S&P is trying to clear the 50-day moving average. The Nasdaq's clearing to all-time highs on a closing basis. What else? And let's see. Let's take a look at the Dow here. Oh, now that it's up 183. Still a ways to go before it gets to its 50-day moving average. The broader New York Composite, same thing there. Let's see what the Russell's doing. The Rudd was trying to get above the 50, so it's trying to get back above its 50-day. But look how volatile this index has been. Let's see if I can simmer it down. Even still, it looks pretty volatile. Just choppy and sloppy, and that's typical of this market right now. Very, very tough to make any significant progress. Let's look at something like, let's look at these big stock names like Apple. This is just chopping around in a base. They come out with earnings, I believe, week after next. And right now you've got the stock breaking down below the 20-day, rallying back above the 20-day and the 10-day, and it's just chopping around. Baidu is helping out the NASDAQ with this move, but you can see in this pattern overall in the weekly chart, let me make this bigger, it's just kind of chopping sideways, slowly triangulating here. So now we're up 184. Look at this thing. How does oil look to you? I don't know. What are you talking about? How does it look to me? It looks like it's going down. What else is there to, what am I supposed to tell you? Oh, no, you want to buy it here or short it here? If you're going to short oil, you had to be shorting it along the moving average on the USO. But, last week I talked about getting short the XOP. That would have been right here at the 50-day line, and it's come lower. So what do I think about oil? I think that was pretty obvious last week. I thought the oil stocks were shorts, and this XOP was reversing at the 50-day line. You can go back and look at last week's video if you need proof. But I was talking about this as a short. Now they're down, and you're asking us how does oil look to us now? Okay, it's down. It's come down. So what else am I supposed to tell you? I'm certainly not going to buy oil. Now, isn't there talk now that the Saudis are going to blow off the agreement, the production agreement?
It's like one day it's that, and then the next day it's
and then it's on and it's off, and then so but for the most part, I guess that's why oil was rallying off the lows, but it looks like garbage now. And some of these oils like Parsley Energy, that was a short up at the 200-day line. These are some that I've been tracking on the short side. Rowan is way down there, so not really doing anything. Fang, that thing just chopping around. So that was shortable again. See how this went past the moving average? It went past the 50-day line. Whoops, that's not the pen. Here we go. It went past the 50-day line here. It bounces off of it a couple times. It rallies up to this peak. So it runs into resistance along these highs, and then boom, it breaks to the downside. But of course, what helps that along is the news. So again, you get this sort of a news-fueled move in either direction, and it depends on what the news of the day is regarding oil. So, it seems to me that it's kind of typical of this market. I think when you have news of, there's missile tests in Korea and the U.S. sending carriers a couple of weeks, so that becomes an alibi for selling. The market breaks down. If Trump isn't getting his tax cut through, the market comes down. This news, that news, whatever. But overall, what we're seeing right now is the weakening economy, and the data that's been coming in has been weak. So unless we see some sort of legislative push out of Washington that gets something done, and right now it seems like everything's just on hold, I think the market's vulnerable to more downside. But really all we're getting is this chop and slop that makes it very difficult to play anything, really. So I hope that helps answer the question, how does oil look to you? It's kind of like, asking a question, how does the sky look to you? Well, it's kind of blue, unless there's clouds, but anyways. Let's see. Some of these names I'm watching a short. Splunk rallying up into the 50-day line. Workday is back up to these highs and kind of low volume push today. Now ServiceNow comes out with earnings next week, but it's sitting right at its 50-day moving average, so it might be shortable. Not sure. I'm watching Morgan Stanley on the financial side. It's trying to get above its 20-day. It's sort of hanging there. I don't know if this becomes a short here or if it's going to head to the 50-day line. But for the most part, I think that the financials are shorts. I hit Citigroup has been really fun to hit off the 20-day over the last few days. JP Morgan, which is undercutting some lows here in the pattern, you can see right here, is trying to turn. I guess it's in a position to try and rally. JP Morgan is. And then, of course, we had Goldman Sachs just blew to pieces the other day and gap down. And I suppose you could treat this as a shortable gap down using the high of the day here at 220 as a stop. That's only $2.50 from here. But the other thing to keep in mind is the stock's come down a long way. So, I don't know if it's necessarily going to keep breaking down. You may be susceptible to a rally, and that's something to keep an eye out for. So, and life has not been easy for the financials, even though supposedly they're leaders and supposedly the Fed is going to be raising rates. And the financials, and also Dr. K was talking about bonds, are all arguing for the fact that maybe they're not going to raise rates. Bonds are coming off today. Was there some strong data that came out? Didn't we get like the PMI or something this morning? That didn't seem to be anything exciting.
Well, the jobs report was strong.
Jobs report? When? Today?
Not the jobs, the unemployment, the jobless claims.
Okay, so that's what it is. I don't know. To me, it just seems like they turn the algos loose and just let them run in different directions on different days. That's basically what it looks like. I mean, my general feeling is that things have gotten so choppy that if you're long stocks that are working, okay, the concrete way to handle it, so JD, Momo, here's JD, Baba, anything that's working, holding the 50-day moving average or holding support, you simply operate on the basis of using that as your selling guide if they start to bust. So if you were long Netflix from before, and once you're breaking the 50-day line, that's, to me, your final level of support, so you would be out of there. So I think if you're long anything that's still hanging in there, that's okay, but a lot of stocks have been breaking down, and you would be forced out and stopped out in most cases. So I think that it's just a matter of operating on a concrete level when it comes to individual stocks, but I don't really think I would be sticking my neck out and trying to get heavy long stuff right here, because I don't see a lot of things that look set up. Yeah, there's some ugly duckling bounces and undercut and rally type stuff, but trying to be really heavy long stuff, especially into earnings or even right at this juncture where the market's a little bit choppy, I don't really think you need to do it. And I think you can just lay back and wait for the next big juicy setups to show up, and that may take some time. I don't really see anything being all that coherent right now. There's a few things that act well, and like I said, if you're long those and you have a profit cushion, then all you have to do is stick to your trailing stops. You don't need to, or you could sell into strength. That's another option. I often prefer that option. That definitely keeps you out of trouble if you're long something like this as it's streaking higher. Any other questions? Got about 10 minutes assuming we want to go that long. But, what do you have today? Yesterday you had some break to the downside after you were, well, I think you opened down and you stayed down all day. No, you opened up and then you rolled over on the S&P. I'm looking at the New York Composite, yeah. And then today you're back up to the 50-day line. But you look at the overall pattern, you're just chopping back and forth. And that just makes things very difficult to deal with. So, you know. Whoops, that's not where I want to go here. Let's use this chart. I've been looking at some of these, Fortinet, trying to hang in there, but you can see on this one you had a breakout, and this is again what you're looking for. You had a breakout here, looks strong, hangs tight, and then boom, down to the 50-day line. And that would be an entry point there if you were going to buy it. Now it's up here. You know, I don't know if that works. Now let's look at another one in the group. Checkpoint had a big outside reversal day on heavy volume 3 days ago. So that looks like it's trouble. Symantec is another big stock name. It's just basing. So there's really nothing conclusive there in terms of any kind of decisive action. So just chopping around. You've got earnings coming up pretty soon. So who knows? A lot of these stocks probably go nowhere ahead of earnings. So let's see. Tesla's acting okay. The one thing about Tesla is it's not really getting any momentum past the $300 price level. You get a couple of percent, 3% higher, but that's about it. And then you've got earnings coming up in about a week and a half. So something could bust one way or the other, and I don't know, you know, if you want to be buying it here, looking to hold through earnings. So again, nothing really to do here unless you're already long the stock from down lower. And there were points to buy it down lower. So in fact, you guys may remember in mid-March I was talking about the undercut and rally on the moving average, the 50-day moving average, which is can be a type of undercut, a different type of undercut. In this case, undercutting the moving average here. So that occurred right here. And then rallying back above it and faking everyone out, because that's pretty typical of this market. So somebody is saying, looks like a cluster of pocket pivots on Twilio. And it seems to me like the only people who would want to be talking about Twilio are people who are still long the stock after buying it on one of these high tide flag breakouts. You know, here's a high tide flag. I guess this was a high tide flag, and that worked. And then you had another one, and that didn't work. Boom, and that was the end of that. So I don't know if I'd want to be messing with this. I don't see. What I see here is more of a wedging rally. I don't see a bunch of 5-day pocket pivots that indicate to me that the stock is necessarily going higher. It might just be a short up here. So, but I'm not into Twilio. You can look at a lot of these, like Nutanix, which was a hot number for a while. That's just getting crushed. Even looking at Line Corporation, that's trying to hang in there. But that's looking like garbage. What were the other hot? Oh yeah, whatever happened to Impinj? This is so like this market though. It's like it loves something and then it hates it. And Impinj is just trying to chop around, so it's trying to come up around, but now it's up to these highs. Maybe that's the end of it. Don't these guys come out with earnings pretty soon, Dr. K?
Let's see. PI is due at on May 4th.
Yeah, so they're coming up at the beginning of May. So just chopping around though. I mean, if you can swing trade these, I think in some cases it's doable. And if you were swing trading even Twilio, I guess you could have swing traded it. Or would that be swung traded? I don't know. Off the lows here. Once you had like an undercut, notice how you undercut this low here. So once you undercut that low and you gap above it, of course it gaps above it. You could have bought it there, I suppose, on an undercut and rally. You're using the low here just under 27 as a relatively tight stop. But still tricky and just a lot of erratic movement there. So, and like I said, I don't know if you really have to be doing all that much or trying to force things right now. So that's just how it seems to me. It's very tricky. You know, if I get gains on one day, I just take them and mostly go to cash and then see what shakes out the next day. And I'll tell you, that hasn't really hurt me any. Taking profits during the day or on an intraday basis. So, you know, if I short something like a UAL up here a couple of days ago and it breaks, undercuts, just take that profit, you know, and go away. And Netflix, the same thing yesterday at the 50-day line. It was perfect. Just take that profit, go away, and wait for the next day. And a lot of times they'll be pushing it right back up the other way. You know, so you think that the market's going to blow to pieces. and it just doesn't happen. And that throws a lot of people off, I think, because you're not getting any consistent movement. So if you're trying to short things or even be long things and sit there and try and position build or whatever, it's not that easy, because the erratic action will just flip you in and out of stuff, and you'll lose profits rather than banking them on a daily basis, which is what I found looks like the proper way to operate. So, but what does that do then? That just makes it a day trading market. So you're asking, someone's asking about AME was on your watch list. What are you looking at there? Potential pod. Was this on our watch list? I don't
I
remember
don't
it
think
being
so.
on our
No, it
watch list.
wasn't.
No, it's not. This isn't really on our watch list, but I do have it on a short watch list as where I keep a list of stocks that look like they could be forming pods. That doesn't mean just because they're pods or punch bowls. And right now this is a punch bowl formation. It's not really a punch bowl of death because it hasn't really failed. It tried to back here, but again, this is how this market rolls. They start to look really ugly, and it just ends up undercutting the lows and rallying back up. Then it starts to break here, and the volume's heavy, and now you're just kind of wedging back up here to these highs, and maybe it just rolls back over. So even typical short sale entry points that I would use don't really work in this market. Usually at that point they become too obvious and they just turn on you, and you're better off shorting or trying to short them closer to where everybody's getting excited about the stock and it looks really strong. So somebody says it was on your e-signal quote list. Yeah, you know what? I just throw up a bunch of symbols on that and then throw it and then show it and see if people start trying to make something out of it. So if it was up there, I probably just threw it on. I'll throw in a bunch. I think American Express was probably on there and a few others. But I just throw up a bunch. It doesn't mean anything. So, and if I'm showing my screen, it's just to throw you guys off, because people think they're going to find something out by watching what I'm watching. But this stock, if you're asking about it on the basis of this, that's legitimate. If you just saw it on my screen and you think that means something, then you are being fooled. So. Yeah, let's see. Now you're watching UAL starting to roll over. I'm looking at this on the 620 chart. I actually like this as a short. Crappy airline too. I never fly it. I fly the Friendly Skies of Gilmo actually. Yeah, starting to break here. Watch this for. You've already got the cross on the MACD, so this looks to me like it's ready to blow chunks here. And I am shorted. I've been putting it out up in here along the 10-day, 20-day, and I'm up to a pretty decent position at this point, so it better break. But that's just what I'll do. I'll just try out some trades. Do I make any major progress? A little here, a little there, but a whole lot of nothing, and it's not really that easy, and that's just the way it is. So operate fast. That's what I'll do, and try to take swing trading profits or even day trading profits. UAL now trading below 69.70, so we can see it's starting to come in. I would be surprised if this thing chopped down a few bucks. Anyways, KRNT, last question. KRNT, what the heck? Oh, let me guess, it's a biotech. Nope, Cornet Digital. Oh, I saw this one. I don't know. I don't really see the attraction here. It's a thin little tech stock. It trades 240,000 shares a day. So I don't know. And the earnings up 60%. The fundamentals look good. If you like it, then buy it. Use a 10-day as your stop. So, anyways, that's all we have for today, you guys. I think for the most part, it's tough to say that you should be getting heavy into this market on the long side. On the other hand, it's not like it's all that easy to short things and make a ton of money. You'll get some breaks here and there, like with the Netflix has worked pretty well. You get some breaks in the UAL. These are things that I've been playing. Citigroup is another one, off the 20-day line. But for the most part, you can see the patterns aren't really coming completely undone. So it's a tough environment. So I would say stay light on your feet, and don't get heavily committed one way or the other. Just kind of move with the setups. And if you're long anything where you have profits, just operate on the basis of your trailing stops, or sell into extended strength if you feel you can determine when that's occurring. So anyways, that's all we've got for today, you guys. Thanks for showing up. Have a great weekend. We'll catch you next week.
So long, everyone.